What's going on, guys? My name is Jeffrey Rodriguez, and in today's video we are going to be talking about 5 tips for improving trading psychology. Alright guys, so in today's video I'm going to be giving you the 5 key tips to my trading psychology and what's helped me along my trading career. But real quick, if you're new to the channel, guys, make sure to hit that subscribe button right below this video. I do post daily educational videos as well as Forex market analysis videos. So if that's something you're into, then make sure to hit that subscribe button. Alright guys, so 5 tips for improving trading psychology. Tip number 1, always stick to your rules. Real simple, guys. You want to follow a set of rules for your trading. You don't want to just get in the market because you think it's a good time to buy or you think it's a good time to sell. You need to follow a set of rules for your trading. So that means you have a criteria or a checklist that needs to be met in order for you to enter or exit the market. So, that may be 5 or 10 items that you're checking off in order for you to want to enter the market, or 5 or 10 items that you're checking off in order for you to exit the market. But whatever that is for your specific style of trading, you need to create that, because by you just entering the market based off of what you think is a good buy or sell with no prior information or data, then what you're doing is you're really just gambling. You're not really educating yourself on why you're entering here, why you're exiting here, and by writing these things down and having a checklist, you're actually forming discipline for yourself and you're developing more patience in your trading because you're waiting for the things on your checklist to unfold. If those things don't happen, then you shouldn't be trading, because at that point you knew you broke your rules, and that's the number one reason that you probably lost money that day if you did. So tip number 1, guys, make sure to always stick to your rules. Alright guys, tip number 2, don't let your current life situation affect your trading. And what I mean by this is real simple, guys. You don't want to get into trading and you're brand new, you don't know much, and you're just coming in trying to make $500 a week right out the gate so you can quit your job in the next 3 weeks. That's unpractical thinking and it's not realistic. You need to actually have a set goal. So you need to be focused on making $20 a day for 3 weeks. Then after you make $20 a day for 3 weeks, bump it up to $50 a day for 3 weeks, then $100 a day for 3 weeks. And you need to get comfortable of what it feels like to actually start making money this way. The discipline that you need to have, the different things that you need to do on a daily basis in order for you to be able to do this. By starting from the ground up, you're able to make $20 a day. You know what it feels like to make $20. You know what it feels like to lose $20. Then you're upping it to $50 a day, $100 a day, and so on. But without that growth like that, you're not going to be able to become a good trader, because a lot of people get in and they just deposit $500 and they want to put on a standard lot and try to make their $500 back in one day. You can do that once you're experienced. If you're not really experienced and don't understand concepts within the market, what you're looking at, market structure, support and resistance, if you don't understand what you're looking at as a whole, then you're not going to be able to make money trading. So you absolutely have to make sure that you always stick to your rules and you're not letting your current situation in your life affect your trading. This is completely different than what's going on in your life. So you have to leave that there whenever you sit in front of the charts. Whenever you sit in front of the charts, focus on what the charts are telling you, not what next month's bills are and how much money you need to make. You need to focus on the exact stuff that's right in front of you, and that's the charts. Focus on what they're telling you and then react based off of that, not your current life situation. That's a key tip, guys. Make sure you implement this. Alright guys, tip number 3, never put on more risk than you can handle. And again, just like I mentioned in tip number 2, a lot of new traders that get into trading, they want to put on a huge position size without understanding the basics or the foundations of trading. You have to start with this just like riding a bike. You have to start at the very beginning with training wheels, and then you have to graduate to no training wheels, right? You can't get to that point if you're just trying to right out the gate make money instantly by not knowing anything. You have to learn the concepts, you have to learn what you're looking for, and most importantly, you have to see these things happen on a recurring basis in the charts. If you don't see them on a repetitive basis, you're not going to know what you're looking for. That's the only way that you actually will know where to enter, where to exit. You have to actually look at the charts and you have to see things happen over and over again. Then you start to formulate a plan out of that, and then with your plan, that becomes your set of rules, and that's the rules that you're following for every entry or exit. But you'll never develop that if you don't start figuring out what type of trader you are, what fits your schedule, what are the times that you can trade, what are the things that you can see in the charts better than you find, what are the things that you find easier to see other than things that are harder for you to see. And guys, by putting on more risk than you can handle, ultimately what happens, like, let's be real with one another, the thing that you are going to end up doing is you're going to sit and you're going to watch the charts every single minute. You're going to watch every single candle move up and down. You're going to probably drop down to a 1 minute time frame and you're going to watch the candles move up and down. And that is absolutely ridiculous. If you have a $100 account and you're putting a standard lot on and watching the market move, you're going to be extremely stressed out, guys. You can't expect to get perfect entries with minimal drawdown if you're a brand new trader. You have to have the experience. So you can't just come in here and expect to put on a ton of risk and then just make money from it. You're more than likely going to lose money because you haven't taken the time to understand the concepts or learn the things required that will allow you to be able to know where to enter, to place a standard lot on a $100 account and make $900 or whatever you're trying to do. You can do it once you have experience. That's what a lot of you are failing to realize. You can do all these things that you're thinking you can do now, but you're brand new. You have to give it some time and you have to understand the things that you're looking for and spend the time actually putting in the work. And then from that, you will actually see yourself being able to do all these crazy things, make money from a $50 account and then flip it to $1,000 or whatever. You can do that stuff as you become more experienced, but you have to graduate to that level. There's levels in trading and you have to move from each level to the next. So you're going to start with, micro lots, then you're going to move up to standards, then you're going to move up to 10 standards and 20 standards, whatever. But it takes time to get to each level. You have to learn new things. You have to learn things about yourself, about the charts, about yourself and the charts together as a whole. Like, there's a lot that comes in to trading. So just make sure that you're never putting on more risk than you can handle. All right, guys, tip number 4 is this is a marathon, not a sprint. So this is a long game. You have to actually understand that this is going to be something that you're going to learn as the years go by. You're going to learn new things each year, each month. It's not just going to be something that you're going to get right away. And that's because you have to develop as a person. You have to develop as a trader. You have to see new things and you have to write those things down. You have to test the things that you see. Buy a journal, guys. Write down the things that you see in the charts in your journal. Make sure that you're constantly critiquing your trading on a daily basis. You want to journal why you're losing trades, why you're making money from trades, what times are you trading, what are the things that you're doing, how do you feel whenever you're taking the trade. Make sure that you do all these things, guys. By doing that, you're going to start to develop a lot more discipline, and then you're going to start to be able to look back at your trades and see in your journal why you felt the way that you did, what you did in certain situations that made a trade go better than others. And you're going to be able to eventually have this monster beast trading plan that you're going to implement, and then that's what you're going to use on a daily basis to trade with. But you'll never get there if you're trying to go in the markets every single day to make money. You have to learn, and you have to also implement the things you learn. All right, guys, tip number 5, don't revenge trade. This is by far the worst thing any trader could possibly do, is revenge trade. And if you don't know what revenge trading is, it's really simple, guys. It's just after you've had a series of losses, you go back in the market trying to make all the losses back. You have to understand that if you've just put on more risk than you can handle and you lost 50% of your account, you can't expect to put on that same amount of risk and make that money right back. You're more than likely going to lose more money. You have to take it step by step and risk a small amount. You're only supposed to be risking like 5% of your account. So you have to build that back up over time. If you lost $200 or whatever in a day, then that $200 may take you 2 weeks to make back up with the proper risk management. But it was, at the end of the day, your fault for not doing it, for not using proper risk management from the beginning. If you use proper risk management every single time you're taking a trade, you'll never run into this situation. So revenge trading is by far the worst thing that you can do. The thing that I implemented in my trading is if I have 3 consecutive losses, so if I lose three times, if I've gone in the market and lost 3 trades, then I'll sit out the next session, or even I'll take a break for the whole day, won't look at the charts until the following day. and that'll kind of give me a fresh reset, like a little reboot. And then when I look at the charts again, I'll feel a little bit more calm rather than feeling so stressed out like I need to go back and make back all my losses. So that's just my top 5 tips for trading psychology, guys. I hope this video helped you. Alright guys, so that's it for today's video. If you enjoyed it, make sure to leave a thumbs up, and I will see you guys in the next one.
After this track, I might need me some lozenges. I ain't about to go soft, this rapping shit lately been pissing me off. Guess these words are kinda just at the tip of my tongue, but I'm still young and I hope I find the rhymes that'll live through time before that fat lady has sung. Cause when I'm inside this booth, feels like I rule the world. But I'll hop off my horse, hop in your Porsche, give it a